Hey, what's up? It's Ben here. If you're looking to invest in the stock market because you've been hearing a lot of people talk about investing your money, or that you just think that it's probably a good idea to start investing. So when you get older, you have some money for retirement and hopefully more if you're able to invest more. If that's the case, I got you. I'm going to show you my step-by-step process on how I would do it if I was younger and have a little bit of money to start. Like, I'm talking about as low as $10. And by the way, if this is money that you really need, then you shouldn't be investing and hope that it'll double or triple your money in the short term, because it won't work. But if this is just side money to invest, then yes. So here's how to invest in stocks for beginners with little money. Step 1, I would open up a brokerage account with Robinhood or any brokerage that allows fractional shares. This way, I don't have to buy whole shares of a company or stock, because there are stock prices that are in the thousands. And if you're just starting out or dabbling in the stock market trying to see how investing works, then that'll probably dissuade you from investing, because you'll think that you'll need a lot of money to invest or even play in the stock market, which is not true nowadays. In addition to that, Robinhood doesn't have any kind of sign-up fee or trading fee, so it's basically free to open an account with them and trade for free. And if you open an account with Robinhood, you'll get a free stock. Link is down below if you want to sign up with them. Step 2, I would buy into an ETF, specifically VOO. So let me explain. ETF is just an acronym for exchange traded funds. What an ETF is basically a basket of securities like stocks, bonds, or commodities that track an underlying index on the market. So when you're buying into an ETF, you're not just buying one company or one bond, you're buying multiple companies or bonds or commodities all at once, which offers diversification benefits. And you want to be diversified when you're just starting out. The reason why I choose to buy VOO is because it tracks the S&P 500 index, and the ticker symbol VOO is the Vanguard S&P 500 ETF. If you just do a Google search and type in what is the annual return of the S&P 500, you'll see that it has an annual return of around 10%, dated back in 1920. So this index has a track record of growing over time. If you're just starting and want to dabble in the stock market, you don't want to just throw all your hard-earned money into one company and hope that it'll go up over time. You want to at least diversify, so if anything happens to one or two companies, you won't be burned as bad. Step 3, invest consistently every month. And for the best effects, you want to invest consistently every month, even if it's just $10 a month. And here's why. Let me show you the effects of compound interest. So let's say you're 20 years old and you don't have much money. So let's start with $10 for investment. So monthly contribution, you do $10 per month. I think that's doable for someone who's 20 years old. Length of time in years, let's do 5 years and see how much that grows into. Estimated interest rate, we're gonna do 10 because the S&P 500 gives you 10% return annually. Compound frequency, we're gonna do annually and hit calculate. So in 5 years, you will have $748. So total contribution, $610. Granted, you only put in $10 per month, so it's not going to be much. But let's go back up and do 50 years. So if you're 20 years old, 50 years, so that's total 70 years old when you're going to be retiring, right? Granted, over time, you're going to put more in, but I'm going to show you. Look at this right here, exponential growth. This is the compound effect working. So $6,000 in total contribution, $140,000 in future value. But let's just go back up and say that over time, you want to put more money in. Let's say you want to start out $100 per month, right? 50 years for the time, we hit calculate, right? In 50 years, you'll have $1 million, around $1 million, over $1 million. And then right over here, total contribution, $60,000. And this is the beauty of the compounding effect. Step 4, don't worry if the stock market crashes. Over time, it'll just go back up. In fact, if that ever happens, I'll put a little bit more of my excess money to buy more. In the past, the S&P 500 has always bounced back up, hitting all-time highs. And I can assure you that within the 500 companies that I'm investing, not even half of them will go out of business during a crash. And by the way, the S&P 500 does kick out weak companies from time to time and replacing it with stronger companies. So you can rest assured that from 10 years from now, you won't be investing in the same 500 companies. And there's no need to manage any of that on my end since the ETF does all of that on the back end. Overall, I hope I gave you an idea of how to start investing in stocks with a little money. If I did it this way, I don't have to be constantly doing research on individual companies. I don't have to actively manage my portfolio, and I get that diversification by investing 500 big companies all at once. All I would need to do is just spend a few seconds every month to invest and maybe check up on it once in a while. It's low risk and easy, and if I knew this when I was younger, I could have made a couple $1,000s by now. Anyways, I hope you all like this video. If so, feel free to give it a like and maybe consider subscribing for more investing topics like this. I'll catch you all later.